This is Ifan from the Strategic Day Trader, and this is your market wrap for November 20th, 2019. All right, Qs are going to be down about 1%, and the SPY going to be down about 0.5%. Okay, there was some news about phase one of the trade deal not being done. We also had FOMC come out and saying they're not going to be changing anything as far as the rates. Okay. And really, that doesn't change anything for us as far as our bias going into tomorrow. Okay, we are starting to see this hourly trend start to weaken. Okay, but I think it's too early to be bearish. Okay, so we did get this pullback into some support. Okay, underneath the support here on the hourly, we can start to look for more follow through, right? So we are starting to get a little bit of a break today's news, but in the grand scheme of things, I still think we are bullish. Okay, a little bit of a retracement here today, but not ending the uptrend. Okay, now of course, if I'm looking for a downtrend on the hourly to start, I will not be getting bearish and picking the top. You know, if that's what I'm looking for, it's just not going to be the process, right? Just like with each of these new highs, I wasn't looking for a reason to pick the top either. Okay, so I'm going to let the hourly go into a downtrend, right? We would need to make a new low, get below today's low. That'll put us into the support. If we dig deeper into that, we can look for the next lower high as a point to initiate shorts. Okay, so I think we are starting to get there. We haven't even really talked about how we would start our bearish bias because it just hasn't been relevant. Okay, finally we got a little bit of selling. The hourly uptrend starting to weaken. So I think it is becoming a relevant topic now, but tomorrow still going to be bullish on the Qs and SPY. All right, and then if we can get through today's low first, and there's follow through to that, then we'll look for the next rally to get sold. Okay, so that's the plan. Could come up tomorrow, but kind of I think this is the first time we really, prior to today, we should be even talking about a potential bearish bias. Okay, so let's talk about what we saw today. Okay, and I got a really good question here in the afternoon. Why can the target here be played even though it is $1.20 stop, I think was the size over this 125 with a stop at 123.80, so about $1.20, right? Why such a big stop? Which, especially like you look at some of these other plays that we looked at today, like this HZNP, right, which was only like a 30-cent stop, right? Why is it okay to play the TGT, right, with such a big stop, right? And the answer is because that is how the pattern is set up. Now, if you come to the conclusion that the stop is too big, there's not enough room to high of the day, and you don't play it, then that's fine, right? I decided, okay, it's too big of a stop. I'm gonna pass because the high of the day wasn't there. But in absolute terms, $1.20 doesn't mean the stop is too big, right? Because I think something like what we saw a couple days ago on the ABMD, right, was also a multi-dollar stop there, $2.50, but that's for something that fell, right? $16 more than that, right? So what is the benefit here of the pattern is that it gives us the answer to, okay, how much should we expect this to move? Where should we put our stop? Okay. And so, you know, if you look at something like yesterday, we played the work. That was a very, very tight stop because the way that it's set up is it suggested that we play with a tight stop, right? So WORK yesterday, we played on this base right here. So look how tight that is, right? Couple cents and then tries to go higher and then immediately negated, right? I think we just last week talked about what happens when you get a certain context, which this one is a bearish context, something that's moving lower, and you get volume on a counter move and it gets negated. probably follow through to the trend that was already established. So we played it right underneath that green bar, right? And so this stop, which was only 15 cents, right? And we're looking for 15 cents, right, on the initial move, and then any more that it wants to give us after that, right? That's because the pattern told us 15 cent stop. So in the case of the TGT, right, in absolute terms, yes, it's kind of a big stop, $1.20. You maybe don't get to get as many shares as you would like, right? But if you're going to play it, you're expecting this can move dollars pretty easily, right? Just like as we saw here. Now, there's one more thing I do want to point out about the TGT here, okay? And that is the importance of anticipation, okay, as opposed to chasing the play. Now, look at what the market did when it got the news about, you know, potential delay or not the deal not getting done, right? Market came in hard, middle of lunch. What did the target do? Stayed sideways, absorbed any of that potential panic selling, right? So then when the market went right back up, what did the TGT do? Broke out to new highs, right? As opposed to, I think, which is common, right, amongst traders, is that we see something, we see this break, and then we think, oh, let's find something short and short it because the market is going lower, right? In fact, when the market is going vertical like this, right, you want to look for what is different. Either what is absolutely climactic, putting in a bottom for a bounce, or what is showing relative strength. Okay? So that's the importance of anticipation. So, you know, all these things kind of have to be put together day in, day out. Finding the pattern, sizing correctly, getting the market timing right, right? They're all important. They're all kind of important pieces, right, that we need to get right, okay? Because, you know, 50 cents on something like the HCNP is not going to be created equal as something as 50 cents on Amazon. Sometimes the spread alone is 50 cents on the Amazon, right? So, you know, as far as absolute terms, if the size is $1.10, as long as it has room, right, and that's what the pattern is saying, that's the size of the stop, then $1.10, $1.20 shouldn't be a problem. Like this ABMD that we saw yesterday, no, 2 days ago, right, was almost a $3 stop, right? But that's what was called for because this had a good amount of spread. It's a pretty high price stock, but even something like the ABMD and the TGT, which are both triple digits, are not even going to be necessarily created the same either, right? So that's the nice aspect, or one nice aspect of the information that's embedded in the pattern for us, right? Which is what is kind of the nature of this? How wild is it? How much volatility does it kind of trade with typically? Even when it's kind of going to sleep here and going sideways, we see that it's still not going to give us necessarily as tight a stop as something like the work or the HCNP. Okay. So interesting increase in volatility today in the Qs and SPY. All right, so that has got us finally looking at the hourly with some potential here for the start of the down move. But I think it's still a little bit too early to tell. Okay, so we did get a nice retest of support there. Underneath today's low, if we break below and we do get selling, the next rally, I think we can expect to get sold. Okay, so next setup, not quite there, not going to be bearish going into tomorrow quite yet. All right, but we will find out soon enough, okay, what the market wants to do. All right, so we'll see what the market brings us tomorrow. All right, and I will talk to you then. Have a good evening.